Hey guys, welcome back to Reserved Investments on YouTube, and thank you for joining me. If you are a new subscriber, if you're a new viewer, I welcome you to the channel. Thanks for taking a look. Thanks for taking a listen. I do have over 130 videos at present time on this channel. A lot of them deal with market dynamics, analyzing the antiques and collectibles trade from the perspective of somebody who's not only educated in the antiques and collectibles trade, but also in economics and finance as well. What we're going to be talking about in today's video is how to identify speculative bubbles as they relate to antique or collecting categories in general. Now, I know what some of my longtime viewers are going to say. Sean, 6-7 months ago, before the whole Corona thing exploded and brought down the year 2020 with it, to the point where some of us are still in quarantine, others of us are not. It's all just one big mess. We have no idea what the stock market's going to do. We have no idea what the virus is going to do. Well, all before that crap happened, I launched a video about speculative bubbles on this small little rinky-dink YouTube channel. And ironically, that video got a lot of views. But that was how to identify speculative bubbles in general. Meaning you can apply the concepts in that video to the financial markets, the real estate market, commodities, gold, silver, oil, crypto, whatever you're into. And also, of course, the antiques and collectibles trade. In this video, what we're going to do is we're going to drill down another layer or two, and we're going to apply some of these techniques to the antiques and collectibles trade specifically. As I've said before, this channel builds. I like to create videos on fundamentals. Then I like to do videos that build on those fundamentals. This is one such example. So in this video, I'm going to present 6 questions that you can ask yourself if you want to be sure that a market is or is not in a speculative bubble within the antiques and collectibles trade. So the first question we have to ask whenever we analyze a market based on these parameters in the antiques and collectibles trade is, are the supply and demand numbers known? Let me ask that question again. Are the supply and demand numbers known? Now, do you see where I'm going with this? Great at video games. Let's ask the question. Are the supply and demand numbers known? The answer is no. The supply side of the equation is the big unknown. Right now, when we look at the prices being paid for graded video games in general, and I'm talking about an aggregate here, one of the reasons the prices are so high is because demand is accelerating and supply is low. That's basic economics, economics 101. You have low supply of something and a lot of demand. The price in an unregulated market is going to rise. And remember, in the antiques and collectibles trade, most markets are pretty much unregulated. More on that in another video. I already talked about market manipulation. That's why a lot of these markets can be manipulated. They're completely unregulated. No one's policing the pricing for graded video games, even graded coins. A lot of these items, guys, it can be manipulated. So where am I going with this? Well, the problem that you have, and again, I'm going to stick on the subject of graded video games just for a second here, is we don't know how many copies of certain games in certain conditions are out there at present time. Look what happened with the wonderful Atari 2600 Spider-Man game, graded by WADA in 9.8 condition. The first one that came to market, somebody thought it would be a great idea to pay $9,000 for that item. Well then, subsequent copies started to appear on the market. What happened? Supply went up, demand now started to lower, because guess what? There's more than 1, 2, 3, 4, 5 copies out there. They're coming out of the woodwork in mass. I would venture to say a game like Spider-Man for the Atari 2600, released by Parker Brothers in 1982, even in 9.8 condition, due to how many copies are out there sitting in factory seal cases, when all is said and done, that game's going to only be worth several $100s at most. It may be under 1,000 at best, meaning right at 800, 900, 1,000. But really, in all honesty, guys, for how many copies that are out there sitting in collectors' possessions, warehouses, and the like, I'm going to tell you, more are going to be coming to the market in mass because they want to cash in at these higher prices for a game like that. So again, if you're going to invest in a lot of these items, the first question you got to ask is, are the supply and demand numbers known? The answer for a lot of speculative collectibles is going to be no. It could be yes in certain instances. For instance, right now, vintage comic books are still in a little bit of a speculative market. Now, to be fair, CGC has been around since what, 2000, 2001? We have 20 years of census, population data, and pricing data for a lot of those items. So if somebody were to ask me, Sean, when we look at the market for comic books, and let's take the big four Bronze Age keys, Giant Size X-Men 1, Amazing Spider-Man 129, Incredible Hulk 181, and we'll go with X-Men 94. If somebody were to ask me, are the supply and demand numbers known? Overall, the answer is yes. I'm going to be very honest. That doesn't mean that the market isn't speculative. It just means there is a interesting correlation when you compare the market for CGC graded comic books to that of graded video games. Graded video games are too new at present time. Nobody knows how many of a lot of those items, with some exceptions, are out there. We obviously know that at present time, there is only one sticker-sealed copy of Super Mario Brothers, graded by WATA 9.4. Obviously. We don't know, though, how many copies of, say, GoldenEye 007 for the Nintendo 64 in WATA Games 9.8 actually exist. The market is too new at this particular point. So, the next question. Now that we've asked the question, are the supply and demand numbers known? You have to then look at, you got to drill down a little bit further, and you got to ask the question, do the supply and demand numbers support the purchase? Now, to be fair, in certain instances on the surface, the answer is going to be yes, guys. Let me use this as an example. If we take the GoldenEye 007, released for the Nintendo 64 in 1997, that got a WATA grade of 9.8 that was sold by Heritage for $19,200. Well, let's apply this logic to it. Do the supply and demand numbers report the purchase, support the purchase? The answer is yes in that case, currently. Now, the problem is, though, WATA Games is too new. We don't technically know how many copies of GoldenEye 007 in factory sealed condition, in 9.8 condition no less, exist out there. But as of right now, do the supply and demand numbers support the purchase? Paying $19,200 seems reasonable for that game at this particular time because, again, there ain't too many out there at that particular condition level that we're aware of. So this kind of ties in with number one, where you got to analyze these very carefully. Obviously, if the supply and demand numbers aren't known, and you get to question two, do the supply and demand numbers support the purchase? You have to kind of over-examine this scenario and say, well, wait a minute. Would the supply and demand numbers support the purchase if the supply and demand numbers are not known? So this is basic, guys. This is how you got to analyze these markets. Now let's go to number three. Is there a catalyst that fuels the market euphoria or the speculative bubble? Let me repeat that question again. Is there a known catalyst that fuels the market euphoria or the speculative bubble? Well, the answer is yes. WATA Games. WATA Games, again, guys, I want to reiterate this. WATA Games produces an excellent product and an excellent service. I have absolutely no problem with the founders, the people who set up that company, their knowledge in certain instances on how they grade this stuff, the product, the end product that they produce. No problem whatsoever with any of that. It's a top-tier company, in my opinion. The problem that I have is when they wander over onto the secondary market and they say, hey, I'm representing this person over here who bought this sticker-sealed copy of Super Mario Brothers in 9.4. We've already gotten offers for $300,000 on this game. And I scratch my head and I say, wait a minute. Why is a grading company representing anybody? Grading companies should be neutral. If anything, they can be a cheerleader for the business they serve, meaning NGC, PCGS, CGC, all of them tend to be cheerleaders for the markets they serve. For instance, comic books are great. Great investment, great item, says CGC. Coins are great investments, great items, says NGC, says PCGS. Video games are awesome. Video games are going to be a new asset class, says WATA Games. You see what I'm doing here? I'm stating that it's okay to be a cheerleader for the items you grade for the business you're in, whether you're in the antiques and collectibles trade or even if you are a third-party grading company. My problem is whenever one of those third-party grading companies breaks the boundary and comes over here into the secondary market and says, we're going to represent this person for this item that we just graded, that we know there's only one out there. We think we can get a better price than what the market will pay at present time. We're going to go on a show and we're going to show our wares. We're going to present it to the world and we're going to represent that seller. No, that is, in my opinion, an example of market manipulation. And that's something that cannot be allowed to continue in the antiques and collectibles trade. A lot of people ask me if it's legal. Again, I'm not a lawyer. In my opinion, if it matters much, it is perfectly legal. You just have to know to watch for it. So where am I going with this? Is there a catalyst that fuels the market euphoria? The answer is yes. The advent of Wada Games. The advent of Wada Games and the way that that service was promoted brought in a lot of investor money into the market, especially for graded video games. And a lot of it came from the comic book side, believe it or not, guys. However, there's nothing fundamentally wrong with that. When NGC came on the scene in the 1980s, there formed a mass speculative bubble in graded coins during that whole decade, the 1890s all the way into the 1990s, to be honest. And you had Wall Street coming in, manipulating the market. If you don't believe me, here's your homework assignment. Look up the Merrill Lynch Athena and Athena 2 funds. The Merrill Lynch Athena fund was created to invest in alternate asset classes, mainly antiques, art, and rare coins. During the 1980s and early 1990s, the fund did go bust. I want to say by 1989, I think the Athena 2 fund finally went bust and Merrill Lynch got sued and had to pay back a lot of early investors because they didn't know what they were doing in the rare coin marketplace. And that's exactly the problem that I have with a lot of these companies that are now set up to operate and sell fractional shares of collectible categories, whether we're talking Magic the Gathering, comic books, graded video games, whatever it is. I am not a fan of fractional share investing in collectibles because it's already an illiquid item that you are making even more illiquid by buying shares that you do not directly control. That's the problem that I have with fractional investing, among other things. So let's go back to this question. Let me give you another example of a catalyst that occurred in some of these markets. CGC is a prime example of a catalyst. If we go back to the 1990s, guys, you used to be able to get a copy of X-Men 1 from 1963, even Amazing Fantasy 15. A lot of these books could be had for literally a couple $100, maybe in some cases, depending on condition, possibly upwards of $1,000 or more. But they were not selling at the high prices they're selling today. What happened was back in 2000, 2001, when comic book grading became a thing, it created confidence and liquidity on the marketplace. And a lot of people got involved in that market and they started propping it up because they said, wow, graded comic books could one day rank up there with graded coins. Now to be fair, I'm going to say it, I'm going to call you guys out. Graded coins is a much larger market than graded comic books. Certain graded coins sell for $10, $12 million or more per coin. The highest a comic book has ever sold for is anywhere from $3 to $4 million. It was Action Comics 1, just so that you guys are aware. So the market for comic books is not as high as the market for coins. I can prove that to you. If you're interested in me doing a video on that, over how I analyze the market, and I can show you the market cap of both the CGC graded comic book marketplace and the rare coin marketplace and compare the two, I can do that for you. Rare coins have a yearly market cap of $3.5 billion to $4 billion per year. That is just collectible coins. That does not include gold bullion, silver bullion, any of your modern era coins, any of the U.S. Mint products. The market for collectible coins is almost twice the size of the market for collectible comic books. Most people don't realize that. Anyway, that would have been a catalyst for comic books when CGC came into that marketplace. The second catalyst that really propelled comic book prices higher was when Marvel introduced the spectacular Marvel Cinematic Universe, and to a lesser extent, DC. DC did have some type of an effect on the market with some of their franchises. My favorite comic book movies of all time were the Batman Begins trilogy. Batman Begins, The Dark Knight, Dark Knight Rises, the Christopher Nolan trilogy. That's my favorite. I think that was done very well. So that did bring in some investors who were geared towards Batman at that particular time. So that acted as a catalyst as well. So those are examples of catalysts that set off either a speculative bubble or a tribute to market mania. Now, let's go to question number 4. And this is a very important question. And now that we're 15 minutes into this video, and I know most of you guys already fell asleep. I see Timmy Poindexter scooting out of class early. I know already. You guys already turned the video off. So we're going to talk about number 4. Are uninformed buyers in the marketplace? This is a very prominent question. If you're looking at graded video games, if you're looking at Magic the Gathering, if you're looking at Pokemon cards, and you answer no, you're not analyzing the market properly. Now, to be fair, and I want to speak directly into the camera with this, any market in the antiques and collectibles trade, even the financial markets on the other side of the equation, commodities market, cryptocurrency, whatever it is, they all have their fair share of uninformed buyers that are coming into the market thinking that either they're going to get rich quick or they're going to pick the item that's going to be a home run 5, 10, 15 years out or even 6 months out. But ironically, speculative bubbles have the largest share of uninformed buyers than any other aspect of these markets combined. I'm going to be very honest. Because what happens is CNBC or even the mainstream media that's not financial based, whether it's Fox Business, Fox News, or whatever news station you love, MSNBC, CNN, if they do an article on graded video games or this graded video game is worth $10,000, it automatically brings the Timmy Poindexters out of the woodwork and they get involved in that market thinking that they're going to make money, either short-term or long-term in a lot of these items. So you have to be able to look at these markets realistically and recognize that there's a lot of uninformed buyers operating in these markets. Now, I'm not going to say any more on that. Instead, we're going to go to number 5. And number 5 is often overlooked. Do financial or Wall Street-like inventions exist in the marketplace? Now, let me give you an example of what would be a great example of this. You ever hear of GP analysis? Graded price analysis, graded point analysis. It's a subscription service where you can subscribe to it, either be a monthly basis or a yearly basis. And it allows you to track the prices of graded comic books through all the dealers and all the auction houses that are intertwined or linked to that company, GP Analysis. Well, what they do is they database all that sales data. So if you want to know what a copy of Amazing Spider-Man 129 and CGC 9.8 sold for over the last 4 years, you can simply sign up for a subscription for GP Analysis, and they're a great service. I recommend them all the time to some of my clients. And you will be able to pull out a list, and it'll show you what that particular comic book sold for through certain dealers, auction houses over that set amount of time. Now, one of the flaws with this service is that not every auction house, not every dealer subscribes to send their data to GPA. So the problem is you are only getting a limited view of the market. And by limited, it's still rather large. I think Heritage gives their data to GPA. I think a lot of the known dealers, Greg Reese, Vintage Comics, Bob Storms, all of those guys do report into GPA, if I remember correctly. It's been a while since I've been on the comic book collecting scene, to be fair, but I do know at that particular time when I was still actively buying a lot of those books, all those people that I just mentioned in auction houses were reporting to GPA. Well, that is a sign of a market that has a financial instrument being used to pretty much analyze pricing trends within that market. Another advent would be price charting. A lot of you guys use price charting for ungraded video games. That is an example of this, where somebody created a database to track the prices of video games from Nintendo, PlayStation 2, GameCube, whatever you want to look up. Price charting allows you to look up the price of a Tetris game for Nintendo or Silent Hill for PlayStation or whatever. That is an example of this in play. The last and final way to identify a speculative bubble is quite simple, and it actually applies to almost all of the antiques and collectibles trade. I included it on this list because it still is important. And that is it a thin market, number one, and is the market easily able to be manipulated? Now, guys, when we're talking about graded collectibles specifically, those markets are so easy to manipulate. I could do a whole video on this, and what's great, I can tell you that because, again, we're 20 minutes in. Everybody already left. I can tell you right now, nobody watches these videos to the end. There's like 5 people out of 2,000 subscribers that watch these videos to the end. So when you analyze the market, you must recognize that just by nature, just by natural progression of the market, if it is a graded collectible overall, those markets are very easy to manipulate because a lot of the grading companies publish population reports. So if you want to monopolize something that you think is quote unquote rare or scarce, and there's only, I'll give you an example, 3 9.8 copies of something, and the grading company's been around for 10, 20 years, all you got to do is buy up those 3 9.8s, and you can control the market fundamentally if you can do that. Now, you're going to have a problem if somebody else is able to come up with another 9.8 that was just sitting ungraded, or maybe if we're talking about comic books, if it's a comic book that can be pressed, and somebody has a very strong 9.6 that they send to get pressing, and those defects end up coming out as a result of that pressing, and it's now a 9.8, well, guess what? Now, your 3 9.8s, there's now a 4th one out there. So you still have to be very careful. Pretty much, though, any market in the antiques and collectibles trade can be manipulated, and overall, almost all these markets are thin markets. You know, I brought up graded coins earlier. Graded coins is a very big market in the antiques and collectibles trade. But compared to Wall Street, compared to the real estate market, compared to even the crypto market, compared to gold, silver, oil, that's a very, very razor-thin market, guys. So you must understand these fundamentals on how to analyze a speculative bubble in the antiques and collectibles trade. Now I'm going to ask you something. Based on this material that I just presented, are graded video games, vintage video games, Pokemon, and Magic the Gathering all in speculative bubbles at present time? Well, I just told you 6 questions to ask to find out. Thank you for watching. We will be building on this topic in future videos. Hint, hint. Have a good night. And if you do like this content, please consider subscribing. Thanks, guys.